if you look at the study, it basically says that there are still huge image and reputation issues that make US companies hesitant to invest in Africa. However, it's not based on ignorance. It is based on both experience and analysis by American companies, because big corporations are interested in Africa. They see that it is growing economically. They see that there are some companies being successful, and they see that not only American companies but other companies being successful, and they see that Chinese companies are very active in Africa. And so increasingly they're starting to become aware of a potential opportunity cost to not being in Africa. However, when they look at that opportunity cost, there is enormous competition for their investment dollars from the rest of the developing world. Some of these very countries competing with them in Africa. And so American companies are still hesitant. They worry about the rule of law. They worry that their executives and their families won't be safe. They are concerned about issues of corruption, and they are concerned about the way in which sometimes the sustainability of the business environment is not as stable as they would like it to be. Because, contrary to popular opinion, they are not investors for the short term only. They like to see longer term returns. There is a risk-adjusted return on investment that they use, and they worry about whether their investment is actually welcome where they want to invest. Clearly, African governments have to understand the needs of American business better if they want them. Mm-hmm. They need to reach out to them more aggressively because they're competing with other developing nations. And they need to understand that they're reaching out not only to companies but to individuals. If they do this, they also need to understand that not everything is going to be in place on day one. The US business model for investment requires education, health, care, infrastructure, a rule of law, and a fair and equitable business environment. They don't want special treatment. They merely want to be treated like everyone else, but they want that to be a sustainable business environment with clear rules that they can follow. And when they see this happening, it becomes easier. However, one of them said to us, "Every time I propose an investment in Africa, there are 10 reasons why we should not be in Africa, and there are 10 reasons why we should be in China," from my colleagues. So the pushback internally is strong, and that's based on the image of Africa. That's based on the reputation of Africa. If you look at how they are treated, whether they are welcome in the country, one of them said to us, "In Nigeria, the president gets us together on a regular basis with the cabinet and asks us whether we have problems. And if we have problems, the minister has to address it. And next time, the president wants to know whether things happened. So things happen." And so they recognize that there are countries where American investment is welcome and wanted. They also make a distinction between countries that are markets in themselves, like South Africa, Nigeria, Egypt, and countries that are part of regions. So if you take all of these things together, American companies are not there yet. They are very careful, very cautious. They are prepared to make investments, but I think they're prepared to make smaller investments than Africa perhaps expect. And they want to see over the long term whether it's going to be a conducive environment to business. So Africa should not expect the same urgent stream of American investment in the short term that they've seen perhaps from other jurisdictions. However, once American companies are committed, they really are committed for the long haul. We approached the US Chamber of Commerce because we wanted to make sure that we get the cooperation of the top US corporations. Because this study is really about the level of the personal interviews we had and about the depth of the interviews. And I was really very grateful for the time they gave us. You know, we had COOs, CEOs, CFOs, CMOs giving us hour and a half, 2 hours at a time, which was formidable. So it allowed us to really have an in-depth discussion, and it allowed us to understand what they were trying to get across. The analysis we have is really that analysis based not on our understanding, but based on the understanding of the people we interview. It's really a reflection of their views and their approach. We interviewed 30 companies, in the of which half were Fortune 100, and all were Fortune 500. So, or 75% were Fortune 500. So we interviewed senior people in really serious companies. And I think the first thing that I found very interesting was that these really senior people were seriously interested in Africa. A couple of years ago, I did a similar exercise on a much smaller scale, but I got the impression that American companies then were not as interested as they clearly are now in Africa, particularly. The second thing that I find interesting is that they are taking or staking a position between the rose-tinted views of the Afro-optimists and the completely black-hearted view of the Afro-pessimists. They're not saying Africa is good or bad. What they're doing is they are saying there is promise in Africa, there are interesting pockets of excellence in Africa that we find interesting, and they're distinguishing between regions and between certain countries that they regard as exceptions. And so very clearly they came out and said, if you look at South Africa, if you look at Nigeria, and if you look at Egypt, these are exceptions, and we think they can be markets by themselves. If you look at Botswana, it's a very promising country, but it's part of a region because its internal market is too small. The issue that they want to see addressed is how easy is it to invest in a region when movement between the regions of goods and people is so difficult. So if it takes a truck a very long time to cross a border, it's very difficult to invest in one country with a hope of serving the entire region. And so what came out of the study was actually a very pragmatic approach by these companies to say, we'd like to go where we see promise, we recognize the promise, but there are some hurdles we have to jump, and some of these hurdles they believe are quite unique to American companies. The other thing that I found interesting is that the American companies have a very specific business model. And when we asked them and said, what is your wish list for Africa? What is it that African countries must do primarily to attract your attention? I was expecting some very clear and decisive points about tax incentives and so on. Well, it turns out that what they want, first and foremost, is education. So when you ask why, they say, well, we don't have a business model where we take thousands of Americans to go and live in a country where we invest. We take a few managers who understand us, whom we trust, to work with locals so that eventually the locals can run that operation. And that is a very interesting point, because when you're an African country, not only should you welcome American investment, but you should welcome American expatriates, because they are not there for the long haul. They are there for you and your people to take over. The second thing they want is healthcare, because they say productive people need to be healthy people. And so it's a very pragmatic approach. There's nothing that I could gather that says it's different from any other place in the world. They are simply saying these are the things that make it possible for us to invest. Infrastructure is another issue they raised. Of course, they raised the issue of rule of law, and they raised the issue of the problems that everyone knows about in Africa of the image of corruption and lawlessness and so on. And those are very important points, but they're important from a different perspective too, and that is that American companies don't only do a risk equation from the perspective of financial risk or operational risk or technical risk. They include in their perspective a whole range of risks related to the protection of people as well as property, protection of intellectual property as well as physical property, the sustainability of the operation, not only the short-term profits. And so when they look at investing, if an American company comes in, unless something happens to scare them off, I think the receiving country could look forward to having a very long-term partner invested in their country, and to having a lot of transfer of skills and a lot of transfer of technology. So overall, the business model that America has for investment in not only Africa but wherever they invest is a very attractive business model from a social perspective. The China issue is actually a bit of a spur to American business. And the reason for that, very simply, is that until China got truly invested and active in Africa, American companies did not feel that there's an opportunity cost to not being in Africa. So more and more, during these interviews, American executives raised the point that, well, if Chinese companies are there on such a vast scale, and if they're doing so well, we must be looking at Africa more closely, and we are looking at Africa more closely because we don't want to lose out. The herd instinct is very strong. Of course, then the risk equation kicks in, etc. And I don't think American companies have any perspective that somehow their investment should be at the cost of Chinese investment, or that somehow they have the prescription that African countries must follow. The point was made to us over and over in these interviews that whatever form of rule of law and democracy and so on that countries want to follow is fine with American executives. The issue for them is that they want to be able to have a certain sense of security and predictability. They don't want a new regime to come in and uproot everything that's been decided and agreed by the previous regime. Of course, they know that certain adjustments are made, and it's a matter of negotiation. These are very smart, sophisticated executives who deal with investments all over the world. So they don't see Africa in that sense as exceptional, namely that somehow Africa must do things the American way. The opportunity cost issue, however, is not yet top of the list. The pushback inside the American companies are very strong. When an executive says, I believe we should be going into Africa, the pushback is, well, why not India? Why not China, indeed, or Vietnam? And so they see a lot of competition for American investment dollars. And therefore, the fact that China is making money is a spur, but they haven't yet sort of decided to pitch up for the race en masse. It's still on a very calculated basis. The herd instinct hasn't turned the herd towards Africa yet. To look forward, there is of course nothing that says, and this is purely my view, that when Chinese companies have provided infrastructure, be they ports or roads or railway lines, that American companies shouldn't go alongside and capitalize on that infrastructure to support their own business investment. That is what development looks like. What is interesting is the focus on individuals, and I think many African countries would do well to realize that a part of the equation for American companies is that they have to send some of their own people to go and manage these operations. And when there is a safe, happy working environment and living environment, and they don't feel that they're sending their people into harm's way, it's far easier to make the investment. The pushback internally is far easier. So there's a human element to the investment decision that I think is very often overlooked, because there is this image that American companies are only focused on the bottom line.
Mm-hmm.
Of course they are focused on the bottom line, and all of them made clear that unless there's a reasonable prospect of an acceptable risk-adjusted return on investment, there will be no money flowing.
Yeah.
However, once they believe that the risks and the potential return merit a serious decision, the final hinge is the people and how safe they are and how happy they're going to be. When you look at the Gallup World Poll, what is interesting is that the scare story that everyone is selling, namely that China is scaring the Africans because of its business model, is certainly not true amongst the people of Africa right now. The Gallup World Poll shows that Chinese investment is seen as a good thing. It's not seen as a bad thing. And the way they do the investments also seen as a good thing. It's not seen as a bad thing. So I think we tend to overestimate the anecdotal ruling or elite class chatter as being a self-evident truth. That is not necessarily the case. Ordinary people have a different view. But quite frankly, the approach of the American businesses regarding healthcare and some of these social issues is simply pragmatic. It is not because they have some grand design for Africa or because they are do-gooders. It is very pragmatic. It says we cannot employ people unless they're educated and healthy, and we can't move people and goods around unless there's proper infrastructure. And once that is in place, we can operate. So we'd like to see those things happening. What they are looking for is a level playing field. So they don't want special tax deals for American companies. They simply say treat everyone the same and we'll compete. But we can only compete if all these other things are in place. And in some respect, American companies feel uniquely hobbled by the application of Foreign Corrupt Practices Act, etc., which they feel is unique for them. As one of the respondents said, Africa is the only place where our government says you're on your own. We won't help you. So maybe there's something that the government can do, not to encourage bribery and corruption, because that is definitely something that American companies worry about. But again, I think it's more for, in my view certainly, it's more for pragmatic reasons. They have huge market shares to protect in their home markets. And so they don't want to do anything outside of the United States or outside of Europe, where they have big market shares, to endanger their home market. And I think this is the encouraging thing, is that they don't want to treat Africa as a laboratory for experimentation. They want to operate the same way there as they operate everywhere else in the world. They want to have the same level of products. The downside of that is that they need mostly a fairly wealthy middle class for their products. So sometimes the market is constrained. Sometimes what looks like a fairly welcoming, open environment doesn't support the kind of market with the buying power that American companies want to be able to justify their investment. What is interesting, though, is that it's not only Chinese investment that's starting to tell them they might be missing an opportunity. It is also the fact that at a current time when the economic malaise is spreading throughout the world, Africa still seems to project a growth rate. And so that takes their notice, or that garners their notice. In addition to which, more importantly perhaps, is the success of telecommunications companies in Africa. Because what that has shown is that when one presents a product for which there is a real demand in Africa, Africans find the money way beyond the official numbers. And so telecommunications have really outstripped all the predictions. Everyone was wrong about it, and everyone was far too low. The uptake was far higher, and it seems to be consistently higher. It's not a once-off phenomenon. So when you look at American companies, taking in this information, that tells them that there is a market.
Mm-hmm.
The question is, do they have the products that would appeal to the markets so that they part with their money in the same way as they part for telecommunications? That is the analysis that's starting to happen in US corporations. If other telecommunications companies can be successful in Africa, why can't we?
Mm-hmm.
Why can't we? If other consumer good companies can be successful, why can't we? If the roads exist, if they want us there, if it's a welcoming environment, if it's a fairly safe and decent place to live, why shouldn't we be there if the Chinese are there?
Mm-hmm.
And so I think the debate is shifting, and it's shifting to that position between the Afro-pessimists and the Afro-optimists. Let's call them the Afro-realists. Kenya, which is rated quite well in certain respects, it has an effect on the rating of Uganda, whose star is starting to dim. Why? Not because necessarily Uganda doing anything wrong, but because of its position between the Sudan and Kenya.
Mm-hmm.
And therefore I think African governments need to also start looking at each other and saying, brother, what are you doing to me?
Yes.
Because it's very important for attracting American investment that there is a stable region, that they feel that the smaller markets provide platforms for a region, that it's possible to easily and cheaply and fast, in a quick manner, move goods and people between these markets. And so I think there are many movements in the policy discussion that has to be focused on. One of the ideas that I'm starting to come to is that it's perhaps time to be a little more modest, and instead of approaching Africa from the perspective of everyone should do the following, to rather look at specific issues. Let us say in SADC or in COMESA, we are going to really make the movement of people and goods easy between these countries. And we're going to have a uniform tariff structure, and we're going to have a very stable, predictable port system, and we're going to focus on inter-country transport, and we're going to make that easy and simple. There is no reason why a truck should take 7 hours to get from the Botswana side of the border to the Zambian side of the border, for instance. And I'm not quoting a specific example, I'm using it as an example of what we hear. When the movement of goods and people in a certain portion of the world becomes easier and cheaper, suddenly instead of having a market of 8 million people, or as in the case of Botswana, 1.5 million people, suddenly that market is 30 million or 50 million.
Mm-hmm.
And the economy of scale means that the factory in Botswana could supply South Africa, could supply Namibia and Angola. And so there are all kinds of small, modest approaches that could be applied on a region-by-region basis that would help to grow the trade and the investment between the US and Africa. There is a move towards greater unity in Africa. There is a move towards an Africa Union. So there is a political vision of a more integrated, more open flow of people between African states. It doesn't yet exist to the extent that it should if you listen to these executives who say these are some of the things we require.
Mm-hmm.
And it's not because they haven't looked, it's because they have experience. We forget, of course, that there are US corporations that are invested in Africa quite heavily and are very successful in Africa.
Mm-hmm.
And, of course, many of them share experiences. I think the other point is, and this is again something I learned from the study,
mm-hmm.
is that perhaps African nations shouldn't go for the big investment every time, but should rather encourage a small investment from a big American corporation. Because once they have success, they go back for more.
Yes.
And so if you have a small investment from a big American corporation, and that corporation starts saying, well, this is successful, our experience with the government is good, our executives like living there, it's not a problem, then you see things improving. The title of the study is A Conversation Behind Closed Doors. The reason for that title is because we wanted to make a contribution to a more direct, straight-talk approach about these issues than is possible between politicians and business leaders who have a certain politic between them, a polity that they have to be polite to each other and that they cannot say exactly what it is they think. But in the process, they also tend to talk past each other. And so what we are hoping to do with this study is to have an unvarnished discussion. Mm-hmm. And so some of what we report on may be uncomfortable, may not be as polite and as politically correct as would be heard publicly when these executives speak. But there is time for payback because the study is in two parts. So this is the voice of US business. Mm-hmm. Next, we're going to interview Africa political leaders, and you will hear the voice of African leaders. And our questions to them would be equally probing. Do you really want American investment? Are they welcome? Mm-hmm. Are they more or less welcome than others? These are the things they want. Do you think they're unrealistic? Do you think they should not ask for these things? Do you think it's none of their business? Are you going to try and do what they expect you to do? And I think the end result will hopefully be a couple of home truths also to the other side. And so in doing that, I believe the study will eventually, already it gives African countries probably the best and clearest picture of what they need to do if they want American investment. Mm-hmm. Not only what, but also how to go about it. For instance, I heard very clearly here that you have to appeal to the executives, not only to the company. Mm-hmm. Mm-hmm. At the same time, once we've spoken to the African leaders, it's going to give American business a very clear picture of on which door to knock first. Where are they welcome? Where are they not welcome? What can they expect? And so I hope that at the end of the study, we'll be in a position to have contributed not only to a better understanding, but also to a greater flow of investment dollars and economic ties between the US and Africa.